Good afternoon and welcome to our 7th in a series of 10 webinars where we're focusing on affordable housing. My name is Zelda Kane and I am your official moderator for today's program. We are continuing this program from 2021, and the annual theme is opening more doors in 2022. Each webinar will be geared towards educating the realtor community about programs, solutions, and opportunities for your clients in our ever-changing financial environment. Throughout the year, we hope to provide information that is going to create more awareness and take away any stigmas associated with the idea of affordable housing. Most sessions will be held as today, the third Wednesday of each month from 12 to 1:30, and you can always register online at har.com/webinars for each of them. These will continue to be free for all of our members, so be sure to tell your colleagues to sign up and come in and enjoy the topics that we're presenting with our specialists in the fields. Today's topic is going to be centered around the lease purchase program. And before I introduce you to our speakers, I want to remind you that you can always put your questions in the chat throughout the afternoon. You can choose for the questions to go to everyone, or you can just send the questions directly to the panelists. But all of your questions are going to be fielded out, and we're going to address those questions as time permits. And since I know that you were asked, this and all of our upcoming webinars will all be recorded, and they're all available later online at HAR TV and on our YouTube channel, the HAR TV YouTube channel, which you can always find at har.com/HAR TV. So let's get started. Today, we have exceptional subject matter experts leading you through our program for the lease purchase process. We have with us first, Patrick Howard, who is with Trio. I'm going to tell you a little bit about Patrick. Patrick is the EVP Capital Markets and Finance for Applied Residential Inc., and the managing director of its Trio operating subsidiaries, where he has helped develop the evolution of Trio's lease-to-own and their own option mortgage platforms. Patrick has also been in the business for 30 years for real estate. He has municipal project, structured, and securitization financing, including financing and advisory of early stage ventures, affordable and senior housing, multi and single family housing structures, municipal bonds, renewable energy, and various other technology platforms. Patrick has a wealth of information and very knowledgeable about the topic that we're going to be discussing on today. Patrick's professional activity has included working as an investment banker, financial advisor, debt rating analyst, real estate developer, operating company management, and an entrepreneur. Patrick has been a very busy man, and he's only 25 years old. Patrick, is that it? He has served on several boards of companies and built a strong reputation for creating innovative financing structures for complex transactions, as well as having a can-do attitude. If you bring it to Patrick, he can make it happen. Patrick was a collegiate athlete while attending Washington University in St. Louis, and has served as the student body president while he was attending the University of San Francisco. During his career, he has achieved securities license from FINRA and from MSRB. He has secured his real estate license, and he has also secured a private pilot's license. It's like, is there anything this guy hasn't done, right? He is originally from Iowa, has 4 grown children, and resides in Seattle, Washington. We want to welcome Patrick with us today, and he has a wealth of information, wealth of knowledge to share with us, and we're going to turn things over to him and let him educate us. Patrick, take it away.
All righty. Thanks, Zelda. Hopefully I can live up all that hype that you read on paper there. But anyway, and thank you again to the HAR community out there, and Teresa, do a shout out for you as well, since you've helped put this together and organize for us. And to my other colleague here today that's going to be presenting on another program that's been very successful. Jen will speak following me. But for that, I'm going to start sharing my screen here. I'm going to walk everyone through our Trio program that it's known as, and some of the exciting things that we've been able to accomplish in our time and evolution of our program, and some of you out there may be familiar with Trio already, may have even worked with us in the past. So with that, I am going to share my screen, and hopefully that works. We good there, Zelda? Perfect. Okay, so, well, again, thank you everyone for your time today, and let's talk Trio here. So first of all, with Trio and our lease to own program, there's a few things that you're going to be able to accomplish as agents out there. One is to expand your customer base from what you may currently be doing now. Two is to turn loan denials into actual deals. So when you have customers that are near quals, or you've got a home under contract and there's a late stage denial, there's a way to salvage those potentially with our program. And then bottom line is close more deals and make more money for yourselves. So here are some of those situational outcomes that Trio could be a good resource for you, or at least another tool in your toolkit. So those late stage credit denials, if you have customers with no income seasoning, whether it's a new job, they're new to the area, whatever that might be, our program can work for them. If they can't qualify for down payment assistance and they don't have any down payment, perhaps our program can work for them as well in terms of how we're structured and are set up to help the customer. We're great with self-employed or 1099 gig workers. The way we can underwrite them versus your traditional mortgage box that your LO friends out there have to work with. And then for credit scores, we can go down as low as 580. 620 is a minimum for self-employed, but 580 for other clean apps and whatnot. So again, for people needing down payment assistance that have those credit overlays and don't have enough score, we're a good program for those qualifiers as well. In terms of what are we, in terms of what is Trio? You hear this term, but what does it really mean? Well, we're a HUD compliant lease to own homeownership program. We are definitely homeownership finance. We are not a rental program in that regard. We're designed to help people bridge that gap between renting and owning. So we're helping them be able to get themselves in a position, get in their home today, giving them the tools to work on cleaning themselves, their credit, whatever the issues may be, to get mortgage ready. The way we're different is we use an FHA mortgage loan in partnerships with our governmental housing agencies that we've established to work our platform across the country. And so by using an FHA loan, it accomplishes a couple things for the consumer. One is it protects them from future interest rate rising while they're in the lease trying to get ready for qualifying for a mortgage loan. So we lock in a 30-year FHA loan. Today, FHA loans are assumable. It's not a requirement that the customer assumes that loan. If they can qualify for a more favorable financing without maybe DPA or without the mortgage insurance or whatever else that may be required, they've got that ability to do so. In terms of the other benefit for customers, that we've seen a tremendous amount of wealth building for customers by being able to get into our program these past few years and enjoy and participate in these home price, rising home values. Customers are earning that equity in the value. As long as they pay on time on a monthly basis, they are earning that upside appreciation in their home. And when they're ready to purchase, one of the things that we're unique in being able to do is we're able to gift them back, and they're able to borrow against that appreciated value in their home and use that towards down payment, closing costs, if they choose to. We've had people that when they've transitioned through our program, because their home values have appreciated well beyond what their purchase price is, their option price from us, and I'll get into that, how that works in a little bit. But they've been able to not have to come out of pocket because they've been able to use that appreciation in their home. So again, let's give a little overview before we dive into some of the details. Our mission as a company is to help create better homeowners, more knowledgeable, and giving them the tools to succeed as homeowners. We are HUD compliant, as I mentioned. We're a 3-year lease to own program. We do allow for people to purchase earlier than 3 years. And we also allow people to extend up to 5 years in the event that they need more time. They can't, they've been working on it. They just need a little bit more time to clean up whatever the issue is. We're a free customer application through our websites. Customers get pre-qualified is the typical way that this would work. And then you take them shopping for a home based on what they've been qualified for. So we're an open platform system for real estate agents and lenders alike. For lenders, they do have a process that they have to start with, either as a wholesale broker or as a correspondent lender with one of our two program master servicers. But for agents, real estate agents, you're able to just sign on, register, and work with our program at any time. We do purchase the home ultimately. So when you're out there with a customer writing a contract on a home to purchase that home, you need an assignment addendum within that purchase and sale contract. That contract will end up being assigned over to us in our governmental partner entity we've created that's been approved by HUD for this program. And then we'll end up proceeding forward with our lender on that FHA loan in the name of our government agency borrower. Our success program has been just that, a real success for people in terms of providing those additional resources and tools. We do that with credit counseling services through a partnership with Money Management International and eHome America. And then we also provide an insurance product, if you will, that's unique to our program, where it's a hardship assistance. So in the event that a customer were to have some kind of a hiccup or a hardship, a lost job, a setback in income due to healthcare, unexpected healthcare costs or something of that nature, they can file a claim, draw down, and help to offset and pay for their monthly lease payment for a period of time to keep them on their feet, keep them in their home, keep them on track towards that ultimate goal of owning the home on their own. Our home care program, we put in a home warranty on every home we finance, and we have tools and guidelines associated with owning a home and how to care for a home. And so those things are designed to help people become smarter and be more aware of what it means to be a homeowner. And we lock in those monthly payments, they're fixed. We lock in their purchase option price from day one. We set that at a low rate of 1% over our cost to finance that home today. And we're building in what we call home purchase assistance, meaning we're building in the ability for them to earn that low 1% rate over that time. And our down payment assistance is in the form of that home purchase assistance that I mentioned. In terms of our program, in terms of how we stack up to others that are out there, in terms of the feedback we've been given from professionals, we are a governmental partnership. We're unique in that where applications are free and for the customer. Customers do pick out their own home. On occasion, we may have what we call trio ready houses, where there are homes that are available that people can look to, and sometimes we'll offer incentives for those. But otherwise, our home is designed for people to go select their own home, and it's their choice. We are considered owner occupied in terms of the customers and how our financing is structured. And we do lock in that low cost option price for them. Down payment assistance is equities earned through on-time payments. And our conversion rate, which has been unheard of, meaning that people that start in our program that end up owning their home, is over 80%. Never been achieved to that degree in lease to own financing ever. In terms of broker compensation, it's 100% commission for you. So that is something that changed at the beginning of this year. In the past, we did have a broker referral fee. Some of you may have remembered that. Some of you may see that still in some old documentation that is existing out there somewhere. But the truth of the matter is, it's 100% broker commission, 100% commission to you on transactions. So there's no more participation on our part. The exception to that is if we have customers, because we do, that come and apply to our program directly without any representation, and we refer that customer to one of our TRIO preferred agents. A TRIO preferred agent is someone who's gone through our website, our training, taken our exam that we've put online for you, and gets that designation we're going to prioritize any customer referrals that come from us to those particular agents. So I'd encourage you to go onto our Trio Residential website and sign up if you have not already. But that's the only time that there's any kind of broker referral fee. So there's no need for a broker agreement or anything else up front any longer. In terms of our program, it is relatively simple, you guys. But like anything, it's like riding a bike. It takes a couple transactions to kind of get the feel and the flow of how to work, effectively and efficiently with our program. But we're going to break this down into 3 simple steps: getting started, living with us, and then transitioning. And again, this is focused on the consumer experience, and so you understand what this means for your customers. But getting started is, again, they need to apply on our website at thinktrio.com. There's some tremendous videos, our FAQ questions. There's so much disclosure on there for you. You can get lost in it all probably, but at the same time, it's designed to help people. We've got some initial steps as far as, if you can't pass these basic hurdles, then don't waste your time to apply at this point. Get cleaned up so you meet those and then apply. But what happens is when they do apply, comes into our automatic underwriting system, they get an approval that comes back. As long as they've registered you as the referral source or you've registered yourself, then they're going to get an email back after that application, and you should receive a copy of that as well. If you didn't receive a copy of that, either 1, they didn't submit the application, or 2, they didn't put your information in there correctly, so that, and 3, they didn't also say that it was okay for us to share their information with you. So important steps. I've got a nice slide on that to show you how that visually works out in our system. It's not hard, but it is something you need to be alerted to. You take them shopping for a home. There's no need for a down payment. We do provide 100% financing of the purchase price in our program. Our lender originates an FHA loan for us as the ultimate purchaser. Again, we are purchasing, we are the borrower on that FHA loan through our governmental partnerships. The customer signs a lease contract with us. They are the lessee, but they are the occupant, the owner occupant in that home. So that's the basic story there. Customer moves in, you get to hand them keys at closing. In terms of the customer living with our program, once they're in their home, they make their payments through our portal. We provide those tools I mentioned earlier through our Success program, our home care program, and we are pet friendly. So that is a good thing these days for people. When their customers are in their home, they're transitioning into home ownership. Again, they've got 3 years in their lease to work through and get themselves prepared to get mortgage qualified. Their price is fixed, so they have something that they can tangibly achieve and they've locked into. And we do provide that assistance on the back end. And one of the things that we've created, again, we launched it at the beginning of the year, is an additional financial product for the customer that will also help them in some ways, guarantee them the ability to roll into long-term financing and move themselves out of that leasehold interest into an ownership interest. And so it's a new product that we've created that we're very excited about. And it's a lender product, so it's being offered through our lender communities and connections. The customers can assume that FHA loan again, but they're not required to, and they do have to qualify it. Do have to qualify for it. It's not an automatic. So here is a little bit of an illustration, very basic for you, but original purchase price on a home of $300,000. If that home value appreciated to say $330,000 over those 3 years, their option price is locked in at $309,000. That's the 1% a year over. In this case, we're using $300,000 as the cost to finance that home. Gifted equity in this case is that difference between that value, new value, and that option price. And so that is we consider that gifted equity, because otherwise we would be selling that house to them at that new home value versus that option price, which is kept very low for them to help them succeed and keep that home affordable at the end of the day. Again, those are the reasons, many of those are the reasons for our conversion rates being so high like they are. And so who are our customers? What kind of people are we working with and talking about? Well, we've got self-employed for sure. We've got the first-time home buyers with new jobs. We've got recent college graduates. We've got some single households that have gone through maybe a financial hardship through a divorce or a lost spouse or another relative. So we've actually seen all walks of life in terms of in our program. We don't have income limits in terms of there's no maximum income, but we do use an FHA loan. So we do have limits of FHA loan limits in those particular areas as far as home price is concerned. So here are those basic requirements I mentioned on our thinktrio.com website, that there's a nice little questionnaire and blocks with great calculators on our websites as well. But 12 months of positive housing history. Housing history is an important element for us in terms of our underwriting of that customer. It shows their track record in terms of attention to being on time in terms of payments, along with their general credit cards and management of car payments or whatever else they've been doing. Minimum gross income of $3,600. It translates to about a home price of $120,000. So that is really our cutoff. Anything below that, we're probably not going to accept into our program. There is a base cost to owning a home because of all the other tangibles that come with it, utility costs and maintenance costs and all of that. So that's why we've set a minimum, if you will, on that side. The credit score I talked about earlier, and our full underwriting guidelines are available online as well. And so you can consult with those if you have any further questions. Our training also goes into that. In terms of fees for the customer at lease signing, they have a couple different fees that are required. One is our inception fee, which is the amount is 1% of the home price. And then we have an underwriting and program fee of $12.95. So those are your fixed costs in terms of the minimum amount that the customer is going to have to come up with. But there may be some other charges that apply. One has to do with closing costs. So customers are responsible for paying up to 3% of the closing costs as part of their program cost, if you will. So what we encourage you to do as agents for them is, when you can, is to try to get those closing costs covered by a seller concession. And so we know that's been impossible the last couple of years with the crazy markets that we've been into, but we do know that those opportunities are coming back. We've also seen those being available through certain builders that have been working with our program effectively. And the thing you need to be careful about, though, just for a little trick of the trade, is don't artificially just increase the purchase price to cover these, because the issue that you have to be concerned with is the home still has to appraise. And so you can do that if you believe it's going to appraise for that higher value, then that would be an acceptable way to do it. But the caution to you is that if it doesn't appraise, then the customer is still responsible for that difference if the seller won't cover it. Last month's payment may be required as well. That kind of depends on their underwriting requirements and kind of their housing history and whatnot. So those are things that will come back as far as our underwriting process after the customer has applied. High loan balances, you probably won't have to deal with those. Those are usually when loan balances are in excess of $650,000. We do require a minimum down payment on those more expensive homes. And lease payment buy down. So if they were to be approved for a lease payment of, say, $2,500 a month, but they go and pick a home that because of property taxes in Texas sometimes are a shocker in particular financing of home price payments, then they pick a house that maybe their payment comes back and it's like $2,750, not $2,500, which is what they were approved for. They do have the ability to buy down that payment from $2,750 to $2,500. I'm using that as an example. So that is an option for people that if it came to that. And then prior to move-in, they do have to pay their full first month's payment. So here's what thinktrio.com, here's what the homepage looks like if you haven't been on there before. Up here in the right-hand corner is an apply button. And also you'll see in here a number of tools and resources, FAQs, and everything else. This is the application flow inside of Trio. So when an application comes into us, this is what I was referring to before. And this is a really important part for you as agents in terms of your referral and being connected with your customer properly in our system. So if we start on the left side here, here's a question on the application. It's actually like the fourth and fifth question on the application, first page. Are you working with an agent and or a loan officer? And if they say yes, then they need to list your name and email correctly. If you've already registered in our system, then it needs to match what you registered in our system. Provided that is done properly, then the customer submits the application. You will get an email to confirm the same email that they received, that the application has been received. When we get to an approval stage, or perhaps maybe a conditional approval or denial, you would also get an email copy of that. The customer, when that initial email comes back, is a customer ID number that is associated with their application. And that's an important number for you to hold on to. You're going to need that when you upload an executed purchase and sale contract later on. And then the other part that's essential to this is the authorization to release information. So there's just a yes, no button on that front page of the application. They need to hit yes. If they don't hit yes, then you're not going to get that email. So those are the kind of the two pieces to that. So if they say that they're not working with an agent, which sometimes that has happened, even though they are working with you, that's why sometimes we recommend, if you do have the time or it does work out, that you could help them through that application, or at least the start of it, then you can make sure they get this part done correctly. But if they did hit no, then you are not going to get an email back. And then you're going to have to ask them for their customer ID number that they received with that email back from us to say that we've received their application. And then you're going to need that ID number. And just like I mentioned before, you're going to need to use that going forward, registering yourself, connecting yourself in our system with the customer, and then making sure that they sign that release form. If you ever have any questions, you just send in an email to info@thinktrio.com, and our team is ready to help answer those questions and guide you through. Now, the next part of this is the home guidelines, and I think I should be okay on time still. I try to hustle through this. But on home guidelines, we've got a whole home guideline selection. When customers receive back their confirmation that they've been accepted, they're also getting an email for a disclaimer, if you will, that they have to sign off on a disclosure that they're familiar with our home guidelines and our inspection guidelines as well. And there are links to these full guidelines for the customer and for you to be able to get very familiar with. The key here in terms of home guidelines, in terms of what house you pick out with your customer to purchase, it's got to be something that's going to be FHA approved, or will pass FHA appraisal and inspection. If it's a resale, new construction homes, no inspections are needed. We do love new construction. So single family condos, townhomes are all okay. On condos and townhomes, just need to make sure on the HOA, if there is one, that there are no restrictions that would cause anything to be a problem. And we have had cases in the past where HOAs didn't allow for rentals. Our agents have gone in to talk to the HOA, helped them understand that we're not a rental program, and the HOA gave an exception and allowed for our financing to be used in their community. So, if you were ever come across something like that, that is your method to go forward and get that approval. What we don't do, though, is we will do modular homes, or great stick-built homes, obviously, but we're not doing manufactured homes, definitely not mobile homes, and flood zones are an automatic denial as well. And so just those are the main things to keep in mind. Otherwise, we're pretty flexible in terms of what other homes that we're going to approve for people. Our big issue on the inspections, though, in terms of in home selection, is health and safety. And what we don't want people to move into a home that is not safe, in disrepair. It's going to need a lot of costs to maintain the home, and it's a recipe for disaster for people. So we really try our best to help train and educate everyone to not pick houses that need that kind of care. If there is a home that someone finds, or you find for them, and it needs repairs, we can use a 203K loan. So keep that in mind as well. Again, our calculators are on our websites. I encourage you to get familiar with those. They're also on our mobile app, and just be cognizant of using the correct property taxes. And if there are HOAs, do take that into account as well. So when you're under contract, again, that contract needs to include an assignment addendum. And once you're under contract, including that, you're going to upload those into our system at trioresidential.com. Trioresidential.com is designed for our professional relationships out there. So that's our real estate agents, our LOs that are working with our program. That's your website. All of your tools and resources. There's a link for a BPG inspectors for a discount to use them for your inspections for the customer. All of that resides on our resources page of Trio Residential, as well as that's where you're going to go to upload contracts, register yourselves into our system, do any training, sign up for any trainings, and towards your Trio preferred agent status. So that gives you pretty much the background there. This is what the Trio Residential website looks like. In terms of the homepage, here's your refer a client and upload contract buttons on the top right-hand corner. So it makes it easy. Our review for acceptance, again, we review that initial, this is post-application where they've already been accepted and you've uploaded a contract. We're going to review that contract. We then price that home based on the terms and conditions in your purchase and sale contract. And then we'll submit an initial disclosure for pricing back to our customer, details all of their fees and costs associated for the home at that purchase price, shows them what their option price will be based on that. And it's a very clean document for them to be able to use. We then prepared the lease agreement for them with those terms and conditions and those numbers from the disclosure. We asked they have to sign that lease contract at that time and fund their initial deposits. And then that's when we submit to our lender to initiate the FHA loan. We're a guaranteed close when we get to that. When we submit to our lender to start the FHA loan, we're a guaranteed close. The only condition we have is an appraised value that comes back to support the purchase price. And otherwise, there's nothing else that's going to be able to not allow us to close the financing. So that should be able to give you more firepower when you're presenting an offer to a seller or a listing agent that may not be familiar with their financing that you have in there. But you can say that we are a guaranteed close. We are. So with that, we've gone through all of that stage, and it's important for you to stay in communication with us in case we need to continue to collect any or update any information from the customer's underwriting file. For instance, when we flip over, just like a mortgage loan officer has to do, we flip over to a new month, we're going to need to, pull in the customer's last statements from the month before. If they're not responsive on that, that's where we need your help to step in and help, remind them, hey, you need to get that information over. And then the one other thing that's a little bit unique for us is that we do need customers do need to secure renter's insurance prior to move in as well. Our closing process is very simple, but it's all mail away. And basically what that means is our escrow offices with our, working with our loan officers for our program, they're going to basically send us the closing loan documents for us to print on our end. We print them out with our internal notaries, we sign the docs, we mail them back to escrow for the next day, where then we fund and our lender funds on the FHA loan. So it's actually a very simple process, but it is mail away. And in some cases, it may be a little bit different for different, closing offices. We have escrow instructions on our Trio Residential website, and we encourage you to, if you are working with someone new to our firm from a closing office standpoint, that they do need to understand, that we are a mail away closing, and we do use our own notaries, and we do have a governmental entity as the purchaser, and we provide them with all of that documentation that they may need for their files. So that should be done early, not the week of closing is my point. And then post-closing, same stuff as in any home, you guys. And a lot of times they need your help on this, as you well know, in terms of setting up utilities and maybe with their HOA as well. We're introducing them to, some local groups that, handymen or whatever, if they needed something like that. They will receive a post-purchase call from our counseling partner at Money Management International. So we hope that they respond to that accordingly and answer. And then MMI also will do when they're ready to purchase and they've notified us that they believe they're ready to perform on exercise their option to purchase. They do a mortgage readiness consultation with MMI before it's submitted to the lender. So how to start? Sign up at Trio Residential. Encourage you to register to be a Trio preferred agent. Just helps you get a little smarter on the program before you venture out there. And then any and all questions should go to info@thinktrio.com. And again, think Trio for your homeownership financing. And with that, I'm going to turn it back to Zelda and allow my cohort here, Jen, to be able to take over and share her group story and what they do effectively. So thank you.
Awesome, Patrick. We do have a few questions in the chat, and so I'd like to go with those with you real quickly.
Sure.
Before we bring Jen up. So one of the first questions, and I think we've covered it, but we want to just make sure that everybody's clear. The question was, will Trio buy the home and let the client lease during the time frame to buy?
Yeah, I mean, that's how our program works. So the customer is in a lease to own financing contract with us, and we purchase the home for them to occupy under that lease purchase contract. So yes, we do purchase the home. So our entity is on title. Our entity is the borrower of the FHA mortgage. We provide the homeowner insurance policy for the property. And then the customer has a lease contract with us with the provisions of what they need to do to put themselves in a position to purchase the home at the price we've set for them. And they do need to have renter's insurance since they are in a lease position, if you will. So it works very similar to a car lease, you guys, for those of you that have ever leased a car as a consumer finance product.
Okay, so basically when the realtor is taking their client out to look at the houses, they're going to write the contract in Trio's name. The contract is not being written in their client's name.
No, they should write the contract in their client's name,
okay,
and include the assignment addendum for us to then later move that contract over to our borrower entity's name for purposes of our FHA mortgage. So
okay.
yeah, and now I will say in certain cases, if you're dealing with some of the bigger builders out there, more of the national home builders, that they won't allow for an assignment addendum in their contracts.
Mm-hmm.
And so in those cases, what we've done is the customer's gotten under contract to define the terms and conditions. And then we've done a substitution of the contract just to swap it out and put it into our buyer entity's name. So it's direct with that builder as the seller. So that's worked very effectively for many. In other cases, we've had to basically do that work up front. It takes a little bit more orchestration and understanding from the parties so that the customer doesn't even put it in their name. We put it in ours directly, but we won't do that unless they've signed their lease contract. So that's why it's a little easier for them to get under contract first and then just swap out the contract if it's with a big builder.
Okay, yeah. So then Trio actually provides the assignment addendum?
Yeah, it's on our web, and it's also on our website. It's on the Trio Residential website. There's an actual addendum form. You can use that, or you can just copy the language into your standard MLS form that you use, your TREC or whatever. So.
Okay, so now does Trio, is your website in other languages, or is it English only? Do you have Spanish and Vietnamese, other languages as well?
No, you know what? It's only in English at this point. So yeah. We do have some of our loan officer groups out there, though, lending group partnerships, for instance, like Altera Home Loans, if you're familiar with them in your market area. They have translated our stuff into Spanish since that is the community that they serve. So if you were to approach Altera, for example, you might be able to find those kinds of resources available that they've already done those translations. So.
Perfect. So how do student loans affect a person being able to purchase one of your homes?
We actually, we love student loans in terms of, we're very friendly for those. And so if there's a payment, we include it in the DTI, and if there's no payment on the student loan, if it's deferred, then it's not included. So it's pretty friendly in terms of how we look at the student loan.
Okay, so you're back to the old method of how things were done then.
Basically, yeah.
Okay.
Yeah.
That's good to know. That's interesting. Who's going to make the decision about the rental price? How much you're charging for rent on a monthly basis with that?
Yeah. So again, you can do this work on your own if you go onto our website at thinktrio.com and use our calculators. But otherwise, when we price that home based on the purchase price that you've negotiated with the customer, it will spit that back out through our pricing disclosures, and it'll show exactly what it is. But to get a feel for that ahead of time, you should use our calculators and learn how to just kind of give you some close estimates, because they're fairly accurate. But again, on our calculators, it allows for you to adjust for property taxes. And in Texas, I'm going to tell you, you have to use that adjustment, because otherwise it defaults using a 1% property tax. And that's just not realistic in Texas. So.
Yeah, not at all. Not at
Yeah.
all. So the student loans are deferred. If they're deferred and there's no price and it doesn't count towards the DTI, their debt to income ratios. What are your rates for debt to income? What's your front and back end rates?
Our front end is 38 in terms of max DTI, and we'll go to 50 in terms of obligations to income. So we may make adjustments down to 36, but otherwise the standard is 38 and 50.
Okay, 38 to 50. So does the new construction qualify as well?
100%. Yep.
100%.
Yep. We love new construction. Sometimes we have to do a little extra work with that builder to make sure that they're, understand how our financing is and that it's really not any different. So.
Right. So then in terms of the required fees, you've got your required fees, and then the buyer also is responsible for the closing costs. Is that correct?
Yeah. So we cover the closing costs, and we fund everything on our end. The customer's responsible for up to 3% of the closing costs. So if that's covered through a seller concession, then the customer's not having to come out of pocket for any of that. But if there is no seller concession, then the customer may be required to pay up to 3% of the closing costs in terms of their contribution to that. I will tell you though, that what happens when they do is that impacts their option price. So they'll get that back, if you will, because it's factored into their option price. By having to cover that cost, it reduces their option price by that exact same amount. So they may have to cover that up front, but they'll get it back in the back end, provided they end up purchasing the home. So
that was going to be my question, is that they're going to have to pay closing costs twice. So they're covering the closing costs up front for the initial purchase with Trio, but then
up to 3%. Yeah.
Up to 3%. And then Trio will give them credit for that 3%, up to 3%.
In the form of their option price. You got it.
The price. Okay. Yeah. Because they would have closing costs on the second.
Yeah, they'll still have closing costs on the second, but
but they've already been credited for the initial one. Okay.
You got it. Yeah.
Okay. Awesome. And then the guarantee close. So since the contract is being put in the buyer's name, and you're having the addendum, basically the option to have it assigned, the assignment option, then we still have to do the third party financing, and it still has to be approved. The buyer still has to go through that approval process.
There's no approval process for us on that FHA loan. We're already pre-approved. So when I say guaranteed close, if we've approved that customer and we've approved the property, and they've signed their lease documents and paid their initial fees for us to then accept the assignment, we're already pre-approved for that loan. The only thing that we have to wait for is the appraisal to come back to support the purchase price. That's it. Right,
but we still have to have that third party financing, because initially it's done in the buyer's name.
Correct.
Initially in the buyer's name.
Yeah, because the buyer's the one approved for financing. We just end up doing we end up providing the financing at the end of the day. So we're the we're not the lender per se, but we're the facilitator, if you will, if you want to put it that way.
Okay. So what are other expenses the buyer is responsible for?
Just all that I laid out there, that was it. So they've got their inception fee, they've got their $12.95 fee, and then to the extent they may be required to cover up to 3% of the closing costs. And then if they do have a credit, if there's an issue in their credit of some sort, they could be required to cover a last month's payment equivalent as well. But otherwise, that's it. So, and that just kind of depends on their underwriting and their situation. So we don't see that on by no means all of them, but it's, we see them. So
yeah. And these are non-refundable fees. Once they pay these fees and they get into the house and they decide that they're not going to buy it, or something happens and they can't qualify, they don't get this money back. It's just like a lease with any other purchase, any other process.
Yeah, you got it. Now, if let's say though that they covered those costs and signed their lease document, and for whatever reason we didn't close, meaning let's say we got a bad appraisal. So they're going to get a refund back, but net of the cost of the appraisal and whatnot. So what happens in those cases, 95% of the time is that people just end up, rolling into going out and looking for another home. And so those fees just then will credit towards the next home instead of sending, unless they want them back, and then they'd have to repay them again. So,
yeah. Awesome. One other question, and then we're going to get over to Jen, because Divvy has a ton of information to share with us as well. But what's the turnaround time on the process, them being approved through your program?
So it depends on how prepared they are when they make their application. So in terms of us getting back that initial approval or not, should take somewhere between 48 and 72 hours. Again, it's going to depend on the thoroughness and the preparedness when they made that application and having the supporting documentation. In terms of the cycle from start to finish, it shouldn't take any longer than any other standard FHA mortgage loan process. So we typically, you're going to hear our team say, 30 to 45 days, because oftentimes there are some delays either in the appraisal timing, or the customer's not being, providing the information being requested for delays, which is where your help is necessary to keep things on time and on track. But otherwise, our typical time frame is going to be somewhere in that 28 to 35 day range is kind of what I've seen on average. We've seen stuff get done faster, and I've seen stuff get done lower, especially longer, especially new construction, where it's still under construction. So
awesome. Yeah. And work with ITIN and SS Social Security numbers only as well?
We do. Yep. We do a lot of work with I-10 borrowers.
Okay. So what about no doc loans, or people who don't have, you say you work with self-employed, so do you do bank statement only, or those types of
so
things?
We look at, we look at their bank statements, and we look at their, they'll do a P&L for us. We'll look at their tax returns, but we don't rely on those. We actually rely on their bank statements. We look at what their true income is, and not necessarily what they reported for IRS purposes, which is what, our lender would have to use if they were trying to approve them for a normal, conditional loan. Traditional.
Okay, awesome. Well, thank you so much, Patrick. You shared a wealth of information with us, and we've got Jen Jurif with Divvy Homes joining us as well. And so Jen is a strategic growth manager at Divvy Homes. Divvy is an alternate path to homeownership. Divvy was founded to make homeownership and all the power that comes with it accessible to everybody. While Divvy is available in 16 different markets across the U.S., Jen covers the Texas market and the responsibilities of Dallas, San Antonio, and Houston. Jim actually lives in Northern California. We're going to bring her down to Texas real soon, though. And she, along with her husband, her 3 teenage daughters, and their 2 dogs. Jen, we thank you so much for joining us, and we're excited to learn more about the Divvy program as well. So thank you for joining us, and take it away.
Well, thanks for having me. I'm excited to be here talking to the folks at HAR across Houston, and excited to present Divvy. So I am going to share some slides with you as well about the program, and go through some of the content and just answer questions as they come up or at the end, whichever you think is more valuable. So let's get started. Can you see that screen there? Yep. I can't hear you though, so.
Yes.
There we go.
it's
Okay,
good.
okay.
Yes, thank you.
So like Zelda said, I'm the strategic growth manager. I cover the Texas market. So for that's San Antonio, Houston, and Dallas. We are in 16, we're actually in 19 markets now. We picked up a couple additional markets. We've been doing buying homes since 2017 when Divvy first started. So our mission is really to help make home ownership more accessible. And I think that Divvy is a very mission-driven company. Our CEO and founder, Adina Havetz, who actually just won the Innovators Award at Inman a couple weeks ago. She grew up in New York. Her father was an immigrant from Israel and could not get approved for a mortgage. And he was able to find an owner finance situation, which he then leveraged and was able to put his kids through college. So this is a very passionate company for Divvy in really trying to help people become homeowners. So probably not telling you things that you don't really know, but this is all census data, right? And you can see from, 1965 to now, paychecks aren't necessarily rising, but home prices are, and it's becoming more and more difficult for people to overcome that barrier of entry, which is mortgages, to get into the game. So on average, millennials are spending a ton of money on rent. And so how can we get individuals to become homeowners and own their asset and really increase their net worth for their family? So, traditionally, as we've gone through and worked with customers, these are just a few of the different customers that we have helped over time. And the first one being, those customers that, have a good income, they have fine FICO scores, but they just haven't taken the time to save for whatever reason, right? Or maybe they're young and they haven't had the longevity to be able to save anything, right? And we all know that first down payment is pretty big, so it can be daunting. So that's one customer we can help. The other customer that we can help is the customer that doesn't have that perfect FICO score, right? Life happens, there's bumps, and something's affected your credit score. And so as you go through to try to get that mortgage approval, your credit score isn't there. So you sit back and you wait and you try to fix that credit score. I will say the vast majority of our customers are first-time home buyers. And with that, we also have a significant percentage, probably just like other companies, that helps the self-employed or the individual that started a new job or the gig worker, right? So that employment looks a little bit different than your, W-2 people. So really, it's been a benefit to self-employed. The other one that has resonated especially over COVID, is people are moving to new areas and new communities. Maybe they're not sure that they want to live in this home or in this community or in this school district or in this area, right? And so it's really allowing the customer the opportunity to kind of try it before they plunk down all that money and pay the closing costs and the application fees and all of that's associated with that. So now, as many of you probably are feeling this, shift in the market, interest rates are rising. There's some uncertainty, not only on, economics, but housing prices, like where is it going, right? We've noticed a significant increase in programs like this, because we can help those customers by not having to put maybe as much down to buy a home, right? They can kind of get into a program like this with less money down and kind of ride out the interest rates, ride out the economics, and buy at a time that they find more conducive for them. So it's allowing agents really an opportunity to tap customers that they otherwise couldn't sell to, right? So our goal is to help people become homeowners as agents, right? It's really about how can you keep the sales process going and close more homes. So just, it's important to know that agents earn a full commission when working with Divvy. So whatever's in the MLS split is what the agent will receive as a commission. So how does Divvy work? We can go through the steps on this. I think one thing, if you take one thing away from this presentation, really is as agents, right, have the ability to identify customers that would be might value from a product like this. There's a lot of options out there, right? And it can be very confusing to agents to think, well, now where am I going and what should I try? So the important thing to know with Divvy is that there's never an application fee for your customers to apply, okay? And it's always a soft credit check. So what you'll do as an agent is the first thing is you're going to set up your agent portal. You can grab the QR code right here and it'll take you right to the sign up page, which you'll hit agent. You can alternatively go to that divvyhomes.com/agents or accounts, I'm sorry, and it will take you to the sign up page as well. So super easy, hit agent. I would encourage you to do it while I'm on the line here, just in case you have any questions, but it will take you through. It's going to ask you your brokerage. It's going to ask you what cities you're in. And then it will send you an email, which will allow you to verify your identity and finish setting up your portal, which is how you will invite clients. So, one other thing is we are running a promo in August. So as agents sign up, they will earn an extra $1,500 for signing up if they get an offer accepted within 60 days. So this is in addition to that full commission that they will earn. So, okay. So how does it work? Now that you've set up your portal and you can get in there, you can see marketing and training content and all kinds of home searches and calculators and all kinds of content within your portal. Okay. Once you set that up, you'll invite clients simply by sending them an email. They'll get that email, they will accept that email, and they will start filling out some information. It's literally a couple minutes for them to fill out and start the process. Again, no fee, and it's always a soft credit check, so it's not going to affect their credit. So there's no risk in kind of giving this to a customer and saying, hey, have you considered this as an option as you're going through your home search, right? Allowing them to kind of do the due diligence on the program. So they'll be asked some financial information. They'll be asked to upload some financial documentation, verify their identity, and agree to a background check. Okay. Once they go through that, the underwriting process can be 1 to 3 days, can be very quick. They will get an approval and be given a budget. And at that time, that's when, as an agent, you can take them out shopping for a home. Okay. All our homes are pulled from the MLS. So they'll be broken down by purchase price and how the financials break down on it. Right. So you can see all of that up front. Once the customer decides on their home, this is the home they want to buy, we will buy that home for them as a cash offer. Okay. We will write the contract. We will do everything for the agent. We will be in communication with you, identifying all the parameters of it. We will be the cash buyer. We will send that contract to the agent in electronic form, which then they will present to the selling agent. Okay. Once that goes through, we'll do the home inspection. We pay for that. The client will move in. They will pay Divvy one monthly payment every month. A portion of that will be rent and a portion will be savings. Okay. They will then live in the home. It's a 3-year program. The minute that they are mortgage ready and mortgage approved, working with the lender of their choice, they'll say, hey, Divvy, I'm ready to buy back the home. And we will work through that with the lender on the back end, applying whatever's in their savings back to them. That's at a high level. The Divvy customer, what it looks like for qualifications, minimum FICO score of 550. Steadily employed for 3 months, no bankruptcy or eviction in 12 months, and a DTI of 50%. Okay. That's the kind of customer qualifications that you can expect as you send customers over to apply. So this is what we have different saving options for customers, and this is what it looks like. As credit scores are pulled, that's really going to drive what your options are for your customers. So we are pulling from 3 different sources, and that credit score is really what's going to drive your customers' approval. So when you're looking at credit scores below 600, you're going to be looking at 2% down, building to a 10% down payment. Okay. If the credit scores are above 600, they have a couple other options. 2% down, building to 5%. And when we're talking about those percentage down payments, it's on the total, the home value price at the 36 months. Okay. So they're going to build up that savings, which is what they're going to use to work with the lender. Okay. Option 2, the 2% down with the flexible savings, we just released last week. So really excited about this. And we released this option because of the requests from customers. And I'll talk a little bit more about it, but in general, it's customer would come with 2% down, and then they had the flexibility to contribute to their savings account over time. And they're going to dictate that based on, their employment, right? So not everybody is paid the same. Not everybody gets that paycheck every 2 weeks. That's the same amount. So some people have maybe seasonality in their work, or some people have, payments made at different times. So it allows some flexibility for customers. And then customers with credit scores, higher credit scores above 650, they can look at 1% down, building to a 5% down payment. So just a little more detail on this 2-2 flex. And the reason why we released this is because customers were looking to increase their budget and what they can get approved for with Divvy. And the other thing was, not everybody is getting that paycheck. So with 2-2 flex, you will be looking to put that initial 2% down, and then they will have the ability to adjust the contributions to that savings account. And customers will always have the ability in their portal to see at any time how much money they have saved up in that savings account. Okay, so the 2-2 flex really solves for 2 pain points for customers, right? It's extending their budget so they can afford a little bit more. And then it also allows them the flexibility to save at different times within the year. Okay, and we got this feedback from customers in our program. And so we adapted and just released this last week. Okay, and this is just a screen showing you that how the program works is once they're approved, they'll know that they're approved for this 2-2 flex. And then once they're in and they bought their home, they will be able to set up how they want to contribute to that savings account over time. So home qualifications, we're not going to buy any and every home, right? So we are looking for homes that are in good condition. And this is when, we're relying on agents, right, to be the eyes and ears of Divvy. So we're looking for those homes that are move-in ready. We're not looking to put our customers, in the spirit of making them a new homeowner, something that requires a lot of time and money to upkeep. Okay, so newer roofs, newer HVACs, no foundation issues. And so we'll buy fee simple townhomes, single family homes up to 2 acres. And we do work with new construction. And then things that we won't buy, right? Since we are an all cash, quick close transaction, we're not looking for things with problems, things that, take a lot of time and paperwork. And so foreclosures, short sales, condos, homes with serious maintenance issues, those are all things that Divvy will shy away from. So if you're looking at a listing that maybe has fallen out of contract multiple times, or a listing that only has a couple pictures, probably not a home that we're going to buy. So think maybe more along the lines of a home that is FHA approved would be a home that Divvy would buy. Okay. These are prices per metro. So in Houston, we're buying homes up to $450,000, and starting at the entry is at $140K, which I know is becoming more challenging every day. So we will work above that budget if you have a well-qualified customer, but the vast majority of our transactions are in that buy box. Anytime during as you're getting going, you have a question about anything, partners@divvyhomes.com. But one thing better is what I do, and my role is really to engage with agents and offices. So if you want me to join your office training or present to the agents in your office or do a one-off presentation, simply email trainings@divvyhomes.com and we'll get that set up. I'm slated to come down to Houston the week of September 12th. So if that works out for folks, I'm happy to come in and spend some time, because there are a lot of options out there and it can be pretty confusing to agents to kind of navigate and really decide, like, where do I go with this and how do I help my customers? So if there's one thing you take away today, is really the opportunity to, look at these programs as you have customers, as you're reaching out to customers, to help them, right? Like, we have a lot of agents that go into rental communities to, farm like these kinds of ideas, right? So if you take one thing away, it's trying to identify the customer. Once they're in our program and they are fully approved, they will be assigned a Divvy advisor, and that Divvy advisor will be there to guide them, explain all the financials and answer any questions that they have. If they're working with a budget issue, help them increase their budget, help them look at properties in conjunction with the agent that fit their needs. So one other thing another slide that I was just going to show you, and we recently just kind of release this as we're looking at like the shifting economy, right? And maybe you have clients that are mortgage ready, but shying away from completing moving forward with their sale. It's kind of just a comparison to, like, what do the finances match up with when you look at a program like Divvy against just a straight rental or a mortgage, right? And this is we just put some stakes in the ground with a home price of $300,000 and a mortgage rate of 6.5%, right? So when you look at moving forward with the mortgage, right, you're going to be looking at that down payment at 3.5% over on the right. You're going to be looking at an application fee, mortgage insurance, and closing costs, right? So the customer's looking at putting down that nest egg of $24,000 to get started on this home, where with Divvy, with 2% down, and this is an example of building to that 5% in the value of the home. You're looking more at just that initial payment of $6,000 as that down payment, right? And then as you're saving, you're contributing. So the monthly payments are in line, but that upfront nest egg that you're putting down, so to speak, for your initial purchase is much, much lower. So, and Zelda, I'm happy to carve out these slides and send them to you so you can forward them out to the folks that are on the call today.
That would be awesome. I'm sure they would love to have that. If we have anybody that have any questions, we ask that you to please put those in the chat for us. One of the questions, Jen, that came up was if Divvy has a program available in Pennsylvania.
We do not at this time, but we're always, looking at new markets. So.
Okay, awesome. Well, let them know that Pennsylvania has been requested there.
All right, I can do that.
So
yeah, I think too, like just a couple other things to highlight for agents, and I kind of carved this down because I thought we were running short on time, but again, I'm happy to come out to any office and do a presentation. But the two things to highlight is, one, Divvy will write the contract for you on a TREC contract. So we are backed by private equity, and that's how we are cash buyers for our properties. And so when you bring us a customer that wants to buy that dream home, a couple things. One, we'll write that contract for you. And working in conjunction with you. The second thing to know too is, as that customer then signs that agreement with Divvy and moves into the home, while they're living in that for the 3 years, they can make that home their own. So if they want to, change the carpet, paint the walls, hang their bikes on the ceiling, work on the garden, right? That is all, fine and up to the customer. So that is at their discretion to do while they're living in the home. So it's really allowing them to, live in the home while they're working towards it, as opposed to working towards it and waiting.
Yeah, that's great because it makes them feel like it's theirs already,
Yeah,
right? And
and
they work harder to purchase that house, to do whatever.
exactly, right. And that's the, kind of the foundation of our program, right? Is that shows a high intent customer that's working towards buying it back. So they're taking good care of that property, and really investing themselves in it.
Right, awesome.
Yeah.
So you mentioned they have 3 years and you go with a credit score as low as 550.
Correct.
Okay, and their initial investment into getting into the property, what was that again?
Okay, so once they decide on that property and they want to initiate an offer, that is the first time that they are asked for any money, and it's a $500 in earnest money
Okay,
for that property. Okay, if it doesn't go through, they get the money back, or they can apply it to another one. Okay, if the offer is accepted, that money is the start of their savings account. Okay. Once that offer is accepted, we're going through the home evaluation and inspection. The customer will then come with that 2% as their down payment. Okay. So that's, again, their money we're setting aside for them. And then before they close on it, they will pay first month's rent.
Okay.
Okay. So when you look at it, right, what you're really thinking about is 2% and first month's rent is what it costs to get into the program.
Okay.
There's
So
no other fees. Nothing.
the 2% is going into a savings account, or
Correct.
Okay, so it goes into a savings account and then you're saving that for them until they're ready to purchase the home.
Yep.
And then that goes towards their actual down payment.
Correct.
Now, is Divvy applying for, do you have a loan already in process that they can assume, or do they get their own loans, or?
They will get their own loans. So they're going to be working with the lender of their choice while they're living in the home, right? We're offering them credit counseling. We're helping them save, right? And so they're using that savings to work with lenders to say, hey, I have this much saved towards this purchase price. Here's my credit scores. Can I get approved for that loan?
Okay.
The minute that they get that loan that they want, right, at that rate that meets their needs, they'll say, hey, Divvy, I'm ready to buy back my home. And then we'll process it as a for sale by owner on the backside.
Okay. So now Divvy is saving their money. Is there interest being accrued on this money that they're saving for them?
So great question. Great question. So there is, so as they're putting that money in so if they buy back the home, they will be given that savings plus interest.
Okay.
Right. If they walk away, which they can walk away at any time during the program, the risk to the customer is that original 2% that they put down.
Okay.
We will keep that 2%. We're going to use that to get the house ready for the next customer to move in. We will also be paying a commission to whoever is going to be, representing that transaction. So like Trio, probably we put it back as we call them re-divvies, right? They're move-in ready homes that are looking for a new lease to own customer.
Okay.
So that's ultimately the risk to clients and customers is that 2%.
Okay. Now, is there a percentage of their rent going into savings as well, or is that the only thing that's going into? What percentage is that?
So every month when they're putting in, well, we don't, because it depends on which program you're approved for, whether you're building to 5% or 10%, or maybe you've chosen that 2 right, flex where you don't have to contribute to savings. So the rule of thumb is we don't go above 25%.
Okay.
Yeah.
Okay, so 25% of their rent could potentially be going into the savings account.
So 25% of their monthly payment.
Of their monthly payments, right?
Yeah.
Okay.
Yeah, not more than that, but that would be the highest that would go into that savings account. Yeah.
Okay. And these properties are purchased in Divvy's name.
Yes.
There's no assignment being done. So the original contract is being done in Divvy's name.
Yes.
So there's no third-party financing addendum that you have to contend with or anything like that.
No.
Okay. So what if something happens that the person ends up losing their job or their health, or there's death in the family? What happens in that instance?
So we are very focused on our customer, right? And we get it, life happens. So there are a few things like if you're military deployed, right? And you
Mhm.
have to, we will not, we will forego that 2% fee, right? If you're paying your payments every month and you're timely. So there are a very few categories where we won't take that 2%.
Mhm.
However, if you're moving, if you're just saying, I'm not buying this home, I'm moving, I'm getting transferred,
Mhm.
you would lose that 2% basically. If you walked away from the home, you would
Okay.
lose that 2%.
Okay.
Yeah. We
And
won't
so-
force people to stay, right?
Yeah.
And we're always going to do what's in the best interest of the customer to
Mhm.
not put an eviction or anything like that on their record, right? That is what we're absolutely trying to stay away from.
Okay, so
Yeah.
they lose the 2%, but say they stay there for 2 years or 2.5 years before they have to walk away.
Yeah.
or choose to walk away. That additional savings that was put aside, what happens with that? Do
They get all that back.
Oh, they get the savings back, they just
They
don't
get-
get 2% back.
Exactly. Anything that's in that savings account is returned to them. That 2% we will keep, but everything else would go back to them.
Okay, say that they end up, now, first of all, can they purchase early?
Mhm.
Can they get out of it early?
Yeah, you can purchase anytime. We give them two prices to buy back at 18 months and 36 months.
Okay, so anytime during the 18 months, whether it's month 1 or month 18, they pay this price, and then whether it's
Correct. Yeah.
20 or month 36, they pay this price.
Correct.
Okay, so that price is already set there.
Yes, everything is set up front and is fully transparent to the customer.
Okay, and you said that that's then done as a for sale by owner, as a FSBO, basically.
Correct.
You end up doing that.
Yeah.
Okay, so how long does it normally take you to close on the house then, once a client decides they want to use the Divvy program?
So we can close in as quick as 2 weeks. And then obviously, if you have something that, is pushed out a little bit later, we can work with that. But we had a family in Orlando, I believe it was. And I don't know the specifics of their situation, but they were living in a hotel, family of 5.
Okay.
And we were able to find them a home and they moved in within 14 days.
Okay.
So it can go that fast,
Mhm.
but it can also be paced to what your customer needs.
Okay, so everything is very transparent though, right? So the customer knows how much is going into the savings account and they're able to keep up with that as well, so that they can compare their records to your records and what have you.
Yep.
I'm assuming that that's right, okay?
Yes.
So what about I-10 and social security number clients? Are you able to work with those as well?
Yep. So we have Spanish speaking services, and we do work with I-10. So you need a government issued ID
Mhm.
and the ability to pull credit.
Okay. And
So
if they
those
don't
two
have any credit?
If they don't have any credit, then yeah, we can't. Because that's the number one thing we work off of.
Okay, and so you don't do the alternate credit where they're paying daycare and car insurance and different things of that nature, but it doesn't necessarily report to a credit
Right.
bureau. Okay. So what happens in cases of things like a divorce, maybe? How would you handle the funds of the transaction if the original contracts, the lease is done in both parties' name?
So that's a good question. I was actually just asked that last week. And I have to figure that out. I think what would happen is, if it's a divorce, right, and you're trying to take somebody off of it, I think first of all, you'd have to have the person that's staying get approved to be able
Mhm.
to support that payment. But I can look into that. I know a lot of people have used Divvy in the situation where they're going through a divorce, right? And as they're going through the life events before they have settled, right? They don't
Mhm.
necessarily have the money to put down, or they don't want to have that asset as an asset, right?
Mhm.
So we do have a lot of divorced people that have used Divvy in that regard, but I'm not sure about how they handle it if you're on that owner occupancy agreement with Divvy together.
Okay, so how is the rent actually determined?
Rent is market rate rent.
Okay.
And then we add that savings on top of it.
Okay, so
Yeah.
market rate and then it's added
Yeah.
on top of it.
Yeah.
Okay, well, I really appreciate, Jen, the time that you and Patrick have shared with us on today. And I think I've gone through all the questions. If there's a question that I've missed from someone, if you can put in the chat really quick, we'll try to get it done. But, thank you both so much. I'm excited about the programs. I'm excited about working with both of you. Patrick has actually been in some of my classes and presented his information to some of my CE classes to realtors there. And I look forward, Jen, to working with you even more with some of the CE classes that we offer regarding affordable housing. It seems that we've gotten all of our questions answered. If you have any final words, we'll let you have final words. And if not, then I think that's going to wrap it up. But we will be sharing the slides. I think both of you gave permission for your slides to be shared. Someone said something about there not being enough information on the slides, but slides were cut down because of the amount of time that we had for the presenters on our panel today. You can go to their websites, and there's tons of information on both of their websites that explains their programs, and get in contact with them to get additional information as well, if something's not answered from the slides that we present to you. But any parting words from either of you before we let you go about the rest of your day?
Thanks a lot, Zelda. Thanks, Teresa. Good job, Jen.
Thanks, Patrick. Nice to meet you.
Yeah, you too.
Thanks for having us. And I'm sure like Trio at Divvy, once you go in and set up that account, you can go into, there's a training button in there, and there's all kinds of content for training. We do live webinars, and there's like self-paced training in there too. So
Okay, perfect.
appreciate the time.
Thank you all so much. Yes, thank you all so much.
All right, guys, have a good day. Bye.
Thank you. Bye-bye.